Hi everybody and welcome to another Portfolio Insights video. I'm here with Mathieu Roy, VP of Equities here at Lewisburg and Portfolio Manager for our Canadian mandates. How are you today, Matt?
Great.
Good. So today, Matt, could you just shine a little bit of light on one of our positions we would hold in a traditional Canadian mandate?
Certainly, I think it's a great opportunity to learn some of our investments. In this case today, I'd like to talk about Colliers International.
Mm-hmm.
It's a large position. It's a top 5 position in our Canadian equity strategies. So the large cap,
right, larger mandates,
main equity strategies. So whether you own the Canadian Equity Fund or the Lewisburg Equity Fund or own individual stocks, you would find Colliers as part of your investments.
Sure.
And currently it's about 3.5% to 4% of the strategy. So clearly a top 5 strategy.
Yeah.
I thought it would be a good time to discuss the business because I think a lot of people could be familiar with, maybe I've seen Colliers on some commercial real estate around town.
But
right. But you may not be aware what, everything the company does. And from our perspective, a great business.
Okay.
It used to be a small cap business, but currently it's $7.5 billion. So it's a sizable Canadian business with some global operation.
Absolutely.
The reason we love it is it's a great compounder of capital. It doesn't distribute a lot of dividends because it has significant projects that it can reinvest those dollars for you. It, interestingly enough, started in 1972 by Jay Ennick, who started a pool service business, and really he grew it to what it is today.
Wow.
He's still the CEO, he's still a founder and a significant shareholder. In 2005, he accumulated control of the Colliers brand. And in 2015, that part of the business had grown so much that he was able to split that one large company into two. So that pool business eventually became First Service. First Service bought Colliers. And in 2015, they were both sizable enough to create two entities. So the shareholders of First Service received a share of First Service and a share of Colliers. Two businesses we love. We currently own Colliers. We used to own the old First Service. They got spun out. There was a smaller entity back then. We used to own both enterprises in our small cap strategy.
Okay.
Eventually, they grew too large. They had too much excess. We needed to sell it, and we got the opportunity again to be shareholders since the summer of 2020.
Got it.
What it does, and what you may infer a little bit by looking at the signage on companies, it sells properties. So that's the visible part of their business, and it is cyclical. It's not as recurring. There's ups and downs, but they also do leasing, which is a lot more stable. So they represent on both sides of the leasing spectrum.
Okay.
But they also do a lot of other services. For example, they do asset evaluation, and our company would be clients of that for the real estate that we invest in.
Got it.
So you need regular asset evaluations, and so it's very reoccurring type businesses.
Sure.
And they branched off to an asset management of real estate. So they also offer services for investors to invest in real estate. They did that with an acquisition not too long ago. And they recently did another asset management acquisition in the infrastructure space. What's common with all of their businesses, they're very CapEx light, so you don't need to reinvest in the business in terms of CapEx, which means that they generate significant free cash flow, they have high returns on equity, and the company is able to grow earnings per share, which is essentially what we get as shareholders at 15-20% a year, which is very attractive. And sometimes you get businesses where they run out of projects, but in their case, given the different verticals we talked about, they have runway for years and years, and variety of verticals where they can reinvest those cash flow to continue to grow earnings for shareholders. COVID has its challenges, but it created us the opportunity in October of 2020 to become investors in this great business again. So we're very excited about that. And the markets did really well, and Colliers did exceptionally well during that time. So we've already doubled our money, and it's been about a year and a half. Now that's exceptional performance.
Absolutely.
Part of that is what happened with COVID and created that opportunity.
Yep.
But when a business is fairly priced, and it is around 20 times profits, and its free cash is actually higher than its than its earnings, meaning it trades at about 20 times earnings at 6% free cash flow yield. For those that are not familiar, that's still very attractive valuation level for businesses that grow significantly and consistently.
Yeah.
And because that business doesn't require a lot of cash, even with all those acquisitions, the balance sheet's always in great shape because you always have that free cash flow coming in and paying down the debt.
Exactly.
In fact, the last time they asked outside shareholders for additional equity to invest was in 1997.
Okay.
And they've acquired so many businesses since that time. I should count them, but it's incredibly impressive. And so the result is, I don't think we're going to double our money again in a year, but I think we will in 5 years. I think they're going to grow 15 to 20% a year, and you're starting off with a fair valuation level.
Yeah.
And at the same time, we get the comfort that as owners, that the creator of the business in 1972 is still there.
Yeah. Still
the CEO, still owns 20% of the business, and he's not reducing his take. And if you think about the size of the business at $7.5 billion, that's a lot of dollars that he's confident in. So very happy with that holding, and you can expect to find it in your Lewisburg portfolio for years to come.
Well, thank you very much, Matt. That was super informative. Thanks for joining us. Until next time, see ya.